Good afternoon, everyone. Welcome to the Credit Plug channel, where we talk about how to build credit, how to establish relationships with banks and financial institutions, and most importantly, how to get you access to high limit credit funding. If that's something you like to listen to, we welcome you to subscribe. Otherwise, you can support our channel if you just like, share, or even comment down below. It helps our channel get out to a broader audience, and we greatly appreciate all the support. So for today's video, we have a special guest. We have Ken So, CEO of Tillful. So this is a very, very exciting startup FinTech company. And for today's episode, we're going to go over a demo of their new platform. Now, this is a real game changer because as I mentioned previously with a lot of FinTech companies, they're really looking into other ways of leveraging your data in order to provide better insight into the overall financial well-being of either personal or business. So this particular FinTech company focuses primarily on the business side. So providing alternatives to other traditional business credit reporting agencies like D&B, Experian, Small Business Financial Exchange. This is a whole nother way of providing insights into your business, as well as plugging you into a variety of different products and services. So without further ado, I'm going to pass it over to Ken So, CEO. He's going to walk through a demo and just kind of explain what their platform is and inform you guys on how you can benefit from this. Ken, why don't you just, first of all, start off with just a brief introduction to who you are, kind of why you started this company, and just to give us a little background about yourself, and then we'll go into the demo.
Absolutely, Antoine. Thank you very much for having me. I really appreciate it. So my name is Ken So. I'm the founder and CEO of a company called Flowcast, which is the parent company of Tillful. And Flowcast has been around for 5 years, based in San Francisco. And what we do is we are actually providing AI solutions to financial institutions to help them automate credit decision when it comes to SME lending, to trade finance, any sort of B2B type financing. And that's really kind of the brainchild of and the backbone of how Tillful kind of came along. It's really kind of leveraging on the credit insight that we've developed working with financial institutions over the years, and really kind of bringing that back and giving that back to business owners. And today, we'll kind of go through a quick demo, as well as some of the why of what is Tillful is all about, and why did we kind of started this in the first place. All right. So some of you might remember this movie, Yes Man, and in this movie, if you remember, Jim Carrey plays this depressed, cynical bank loan officer.
Right.
And he turned around his life and started saying yes to everything, including every single loan that came across his desk. And well, don't we all wish that loan approvals were that easy?
Absolutely.
Yeah. So I'm sure you guys have kind of gone through this experience. And when you apply for a loan in a traditional bank, of course, the lenders look for certain signs to help them decide whether to approve or deny. And a loan officer typically reviews these, the entire application, and they will ask for these documents, from your tax return, financial statements, your bank statements. They also check your credit profile at credit reporting agencies such as Dun & Bradstreet, Experian, or Equifax. And these business credit scores are based on a lot of assumptions. For example, if you haven't had your business for more than 2 years or had any kind of trade lines reported,
absolutely,
that may result in a very low score.
Absolutely, yeah, for sure.
Yep, modern online lenders now are challenging these traditional credit reporting agencies. They do that by leveraging more real-time data and make faster decisions. So if you ever apply through online lenders such as Fundbox, Bluevine, Brex, they can make decisions in less than 24, 48 hours. And the way to do that is by using algorithms to automate the credit decision part, outside traditional business credit. So this is just a kind of a screenshot of their application process. So we built Tillful to really modernize how business credit is done. it really provides a fair and transparent credit for businesses. It's a free app that anybody can use and download and help business owners build stronger business credit and stay on top of their financial health. Again, it's built by the team at Flowcast, and so we have many years of understanding credit risk and modernizing how this is done. So you get that benefit from the proprietary credit insight from these models that have been trained with lots of data and currently deployed at funders. Second, we applied advanced machine learning technologies to help find these patterns from real-time financial data to accurately assess risks. And lastly, we support many bank connections, over 2,000 financial institutions that you can really aggregate all your accounts in one place. We use bank level encryption to ensure your data is safe and secure. We don't share any of your data, even if we don't actually access it or touch your data. We believe the data is yours and you should be in control of your own credit. So now I'll just kind of take you through our product demo and and kind of show you some of the things that we're building out and we're offering. Well, first, the onboarding process is very easy. First go on to the platform, you sign up. You first look for your business. So we have a repository of almost all the businesses in the U.S. You simply kind of type in your company name, your state, find your company. There could be other companies that with a similar name. So just select the one that matches yours and with the right address. Next is connecting to your bank accounts. So it's real simple, and we use a third party to connect it to your bank account. Simply you select the bank by typing in the bank account, the bank that your business is banked with. Now, after you select the bank and log in, we would ask several questions to help with the onboarding process and help build up your company profile, as well as to learn about what are some of your immediate needs by asking you things around your revenue levels, industry that you're in, what kind of business model that your business has, the types of financing products that you're looking for, whether it's a working capital loan, line of credit, credit cards, or other types of financing products. And then within a minute, we can actually comprise your business credit score. And the way we do that is really by taking your historical transaction data, and our models have been trained with hundreds of thousands of different businesses. So we have seen a lot of data, and the models actually have learned quite a bit. So we can accurately build a very accurate credit profile for you just based on your cash flow type behavior and transaction type behavior. Given that this is all real time, our score is reflected daily. So you can kind of see a day-to-day change in your score, a week-to-week change in your score, and we can show you that your history of how your score has been trending on a real-time level. Currently the score is based on a number from 1 to 100, and a high number is good, and a low number is not so good. Now, more importantly, we also surface what are the factors that are impacting your score. Now, the current model currently uses more than 50 to close to 100 types of features to develop your predictive score. Here we would summarize what are the top key features and factors that are impacting your score, either in a good way or in a bad way. In this example, we're showing some of these features, including account balance trend that are impacting your cash flow stability. Is it stable? Is it volatile? Whether you have any overdrafts in your account in a recent month. How consistent is your income? Are you getting? Is your business very seasonal or very lumpy? Some of those factors are captured in the credit model that's been shown here. So a lot of these factors are based on your cash flow, based on how you operate and the behavior of your business. You can you can drill down on each of these factors really to understand what are some of the ways for you to improve, or what are some of the ways to kind of help you be consistent on on some, staying on top of these factors. Now, in terms of the accounts, you can aggregate as many bank accounts as possible, whether it's your checking, savings, your loan accounts, or your credit card accounts, or even your investment accounts can be connected to the platform. And we assess different types of accounts differently, so the model is able to kind of pick that up and be able to find patterns based on the types of accounts that being connected. Now, in terms of credit, one of the important factors is really staying on top of your financial health. Just like people use Fitbit or even Apple Health to kind of keep track of their own health. We want to ensure that businesses are healthy, and the ways that to stay healthy is really looking at their income and expenses. As your recurring expense starts to grow over time, this helps you. This screen, we have a module to help you stay on top of that. And keep track of when are things are coming up due, how are you delinquent, or do you need to pay off some of these recurring expenses, as well as the income. Are you clearing some of your invoices and payments that are chasing your customer to pay them on time, and so forth, to kind of help you keep on track of your cash flow. Now, lastly, one of the key feature that is important to our users has been creating the right financing programs to them. In the U.S., there are literally thousands of different financial institutions offering different loans and programs, and as well as all the online lenders and financing products. So in this sea of solutions, how do we help you find the best match? And what we do here is, based on your score and your profile, we are able to match you with high probability odds of programs that will likely get an approval based on what your needs are and based on your profile. And then we also would surface some of the product terms and details to help you get approval on some of these programs. As the world move more and more to online, there's quite a few financing vehicle and products that are available to you, and our mission is really to kind of help you find those and be able to get approval on them, and we're serve as a connector and to help you find and be able to get approvals. With that, I will maybe pause here and see if any questions from Antoine.
Absolutely. Wow. Just going through this, I jotted down a bunch of questions that I wanted to run by you. So first, I wanted to ask you, okay, so you mentioned that you can plug in like your different accounts, like bank accounts. You also mentioned like investment accounts and credit cards. So that's really interesting, because not only are you evaluating data based on like the amount of capital that a business has, but what other sorts of insights do you gather from some of these other types of data sources? For example, like the amount of credit cards someone has, because that can give you a couple other insights, especially when it comes to businesses, right? So knowing that a business has access to a certain amount of capital, that could definitely play into a factor when it comes to subsequent approvals and things like that. But yeah, like how does that information, what types of insights can be garnered from that type of information when a business is able to plug that in, from like a lender's perspective when they see some of these other data points?
Yeah, absolutely. So from our standpoint, we want to really give the user a true picture and true visibility on their actual financial health, and not just one glimpse of it. So the more accounts that you plug in of your businesses, the more complete the picture is. Whether that is all the credit cards that the business has, or some of these loan accounts, like a PPP loan type accounts that maybe a business has, and be able to aggregate all that. That helps us build that net worth type factor, which is a key component to how lenders also look at your credit worthiness. So that's one. The second is, obviously some of the utilization rate that you may be generating by, using some of your credit cards. So the more you can aggregate, the more complete the picture is going to be.
Absolutely.
And some a lot of times credit card providers, want to see that, you're not too over leveraged on certain, credit,
Right.
other credit providers. So having that complete picture is very important. And we would aggregate all these factors together to generate one complete picture. Yeah.
Absolutely. And I think that's really important too, because like you also mentioned, like other types of accounts, like investment accounts, or, sometimes just having all of that insight, it has to come from different places. But I like the fact that everything's sort of integrated, because like you said, it provides, the full picture. So, you have as many data points to make a decision. Excellent. So another thing that really caught my eye too was the income and expense tracking, that functionality. So that's actually one of my pain points as a small business owner, having multiple different accounts and having to track that in an organized way, because, we have apps for basically everything that we use. So keeping track of that can sometimes, get behind you if you don't have it organized. So let's talk a little bit about this.
Yeah.
So does this platform allow you to, or this functionality at least, allow you to plug in your data from, your different types of accounts? How does that work? Do you like log in the same way you would okay.
Yeah, so it's a seamless way as you would when we built the credit profile, by connecting all your credit card accounts, your checking account, savings account, because and even your PayPal if you have a PayPal account.
Right.
So some of these expenses, whether it's a CRM that you subscribe to, or Google G Suite, or any of these SaaS service, we would aggregate into one place. And even if you're paying it through your PayPal, you're paying it through different credit card accounts, we would aggregate into one single place and recognize that these are recurring expenses, as an example. So one data point we have is an average early stage startup use more than 40 different SaaS type solutions. And some of them are like $5 per month. Some are hundreds of dollars per month, or even like Facebook ads or Google ads. Those are much higher for a typical startup, and those would be surfaced in a recurring expense tracker. And like for me, the one of my inspiration in building this feature is that I personally, we also use more than 40 in our company, and we just lose track of how many WebEx accounts do we have, or how many Zoom accounts do we have.
Absolutely. Yeah. I could definitely case in point, like I have a Zoom account, and I remember looking at my credit card bill and seeing like I don't remember having a recurring expense, or even like with QuickBooks, all these different types of subscriptions, you might not be consciously aware of it. And I could definitely see in a small business, just all the different accounts that I have, something like this would definitely provide just more organization of kind of where your money is going. It may not seem, $100 here, $50 there, but if you have 40 of these different types of accounts, it could definitely add up. So I definitely, this definitely stood out to me as something that even myself, would benefit from. So this is excellent. So I have another question too that I wanted to go over. This had to do with, I guess, kind of the matching of the credit products based on the business's data. Now, there are other like the major credit reporting, things like Credit Karma, Experian Match. So my question is, those recommendations, is that only based on some type of algorithm that's looking at businesses who have this particular product, and basically mapping that back to whatever, your business's characteristics are to give a prediction. Is it just purely that, or is it also looped back in with that particular financial institution so that they're actually pre-qualifying, or pre-approving based on the data, or is it just basically, or is it not looped back to the actual financial institution?
That's a good question. So currently, the recommendation engine is pretty similar to how Netflix is doing their recommendation. If you watch,
Right.
say you watch Breaking Bad, you're likely to watch, related type shows.
Exactly.
So, behind the scene is a machine learning model that, finds that look like, other users similar to you, have to, watch certain types of, shows a certain period of time. And so all these factors are taken into account. Similarly, we would do the same. We use using a machine learning model to find lookalike patterns to show what is the probability of approval rate, and the propensity of you selecting this product. So that's how we do the matching. In terms of pre-approval, that's probably the next phase that we're pursuing. Right now, we're not there yet to pre-approve an actual application plugged into the bank. But we are currently working with several banks right now. And in fact, one of our investors is a bank. So, kind of be able to kind of connect with their, approval process to really determine the approval rates.
Absolutely. Okay. That's definitely something great to look forward to. Now, I have another question I really wanted to ask you too. And this has to do with, so for example, let's say there's I think on the website you had maybe like a PNC business credit card, right? So when, let's say a company gets approved for that and they now have that card, that card is plugged into this, platform. So then are the models automatically going to readjust to incorporate that customer's data that just got approved for that? And, the reason why I asked is because, how you said it's sort of real time in terms of, or maybe not real time, but much quicker than like the credit reporting agencies would update your credit report. If that account's plugged into this platform, you're getting, up to date information. So let's say, and this is really important. So let's say a particular institution got a flood of applications and now they have all of this rich data on, or, this platform would have rich data on those who just got approved. So then, when another business is looking for, funding and they go on that particular page, it's making those recommendations based off the latest data on, similar companies who got approved and, based on their characteristics, kind of comparing that against your characteristics to see if that would be a prediction for you as well.
Yeah, exactly. Yeah. So the recommendation engine is, it keeps updating based on what matching that we found. Now, in terms of the approval, let's say company B just got an approval for, let's say, an American Express card. We won't know that until that user plugs that into their profile. So that's something we haven't, we'll have to be able to have the user initiate that before we can kind of retrain the model to update the recommendation.
Right. Okay. So plugging that in would have to be manual, but I think the benefit though, especially because there's a lot of value that comes from this, in terms of all the features and functionalities. As a user, I would definitely want to go through that process just because, like you said, it just gives you a better view of things. So,
Absolutely.
and the fact that it gives the user control what they want to, I think, even me, I'd be very encouraged to just plug everything into here to make sure that, you're definitely on top of everything. So, Excellent. And then lastly, the last thing I wanted to go over, if you could scroll over to the picture where you show the actual credit score categories from 0 to 100. Okay. So I guess, maybe just a little bit more context on, these different categories in terms of like, what does a good score between 76 and 82, what does that mean for a business owner in terms of like what types of financial opportunities that would open up?
Yeah, no, absolutely. So, well, first of all, the way this is built is based on a model that's been trained on hundreds of thousands of different businesses that the model has seen, and some of those businesses have defaulted and have credit issues, so that therefore in those cases they do bear more to the side of the lower score. And that's kind of how where we bucket them into these 5 different categories. How this should be interpreted is that more traditional bank, where they tend to be more conservative in terms of their credit underwriting, will look for scores that are generally in that 83 and above, or maybe in the high 80, 80 and above type range, while some of the alternative lenders and fintechs can be in the 70 and 70 and 60 range and above. But the trade-off is those tend to have higher costs and and also lower limits for those segments. Now, if you get into the poor and the very poor area, then we would recommend, obviously, ways for you to build back up your score. So in our case, we're not looking for trade lines or things like that more traditional CRA are looking for. This is, currently is based on, factors around your net worth, factors around your cash flow behavior to generate these scores. And that tends to be where the market is heading. A lot of the lenders now are looking at those factors as opposed to more traditional CRA type factors.
Yeah, no, that's definitely like a very good point, because even myself, I come across a lot of business owners who, have cash flowing businesses that have been successful, or, they're transacting, but, since the credit scores are so backwards looking, it doesn't really give them a fair shot of really demonstrating how good of a customer that they could be based on their current financials, their banking data, net worth, and things like that. You'd be surprised. There are a lot of high income earning individuals who, may have, bad credit, or, not the highest credit, but their credit score doesn't really show that, they might have a high income or a business that's, successful. So I think this really does capture an untapped market, if you will, just because it's able to provide a much full picture. And as you said, and this is, one of my opinions as well, your checking account is going to show much more, is going to tell a lot more about your current situation. Whereas like with, credit scores from the traditional credit reporting agencies, they're going to be looking at all of your past information that may not even be relevant, to this particular point in time. Yeah, wow. So, I just wanted to thank you for this demo. I mean, this is definitely a product that I will be, signing up for. And then I guess one last thing too, could you just briefly go over all the benefits that a user would get from, signing up and using this particular platform?
Yeah, absolutely. So I think, kind of 3 key things. One is getting a full picture of your credit worthiness and your financial health all in one place by aggregating all your accounts. Second is staying on top of your income expenses, ensuring that you have enough money to meet your payroll, ensuring that there are not anomalies that are in your cash flow. And then lastly, a place where we can create and aggregate, strong financing offers to you and recommend offers that may match your financing needs. So we're building that connecting tissue for users to be able to kind of tap into, new sources of financing that they need in order to grow your business.
Wow. Yes, absolutely. Well, this was an excellent demo. Definitely thank you so much for going through this with us and just sharing this. I really think this is a groundbreaking platform that's really going to provide a lot of value to business owners. And I see it through a day-to-day perspective, working with other business owners. And something like this, they're really kind of, in my opinion, really evens the playing field in a sense. Especially for well-deserving, businesses that are, bringing in revenue. And you could really, based on some of the insights gathered here, you can more easily, alter your financial habits, for your business.
Absolutely.
Based on these metrics, and it's much easier than it's harder to repair bad credit, but since this is more forward looking, and I believe you said maybe it goes back 6 months or so to look at all the data. I think this is definitely an excellent tool all across the board, as Ken mentioned. Being able to get the full picture of your business financial health. It also allows you to track your expenses so that you're more transparent with where your money's going, in your business. And then also, providing you with different metrics that you could, utilize and basically, alter your behavior so that, you're really doing what's going to best help the health of your business. And I think, when that's transparent, then, you're more likely to adopt those types of habits. And I think, something like this, as you mentioned as well, since it's real time, you could see these results, from, let's say, you got an injection of capital into your bank account, or, vice versa, right? It's just going to give you the most, up-to-date, accurate picture through and through. This is a great application. I'm excited to, have had this demonstration, and I'm definitely signing up as soon as we get off of this call. This is great. So, ladies and gentlemen, again, this is Tillful, up and coming FinTech startup. They have some great things bubbling over there. So definitely check this out. And lastly, where can users go to sign up if they're interested right now? Is this live currently?
Yeah, absolutely. So you can just go to tillful.com, TILLFUL.com. Yeah.
Excellent. And this just for, is there an app, or is it only for through a web browser for right now?
There's it's a web app, but we're rolling out a native app pretty soon. So stay tuned for that.
Excellent. So I'll have the link in the description for you guys to go check out. Again, Ken, it was a pleasure, and I definitely look forward for what's to come with Tillful.
Well, thank you for the opportunity, Antoine. Really, it was a pleasure to be here.
Absolutely. Anytime. Yeah. I hope to have you back as well. So with that being said, ladies and gentlemen, until next time, y'all take it easy, and we'll talk to you soon. Peace. All right.